This is Alan Bush with the Daily Financial Forecast for Tuesday, September 27th. Starting out with the stock index futures, we did see some good gains in the overnight trade, but all of this strength evaporated as the European equity markets came under pressure. This appears to be largely due to the European banking system that appears to be somewhat stressed. So some follow-through weakness with what is happening in Europe, giving back all of the gains in the indices. However, we did see now more recently somewhat of a boost in the stock index futures here in the U.S. with the consumer confidence report coming in quite a bit stronger than expected, so we're back to higher on today. Either way, it still looks like the main trend is higher for stock index futures. And with politics aside, as long as interest rates stay as low as they are globally, we can expect the bull market for stock index futures to continue. Now, moving over to the currency markets, we are seeing the dollar index trading higher, even though we are seeing prospects of a Fed rate increase diminishing, and we're seeing the euro currency trading lower, even though Eurozone M3 money supply coming in stronger than expected. So a lot of these markets ignoring some of the headline news. We are seeing the British pound trading a little bit higher, and it is holding the 129 support area that we were looking for that market to hold. Still thinking that the pound will trade in a broadly based range between 129 and 135. So that support area holding, and I would trade both sides of the range in the British pound. Also now in the Canadian dollar and the Australian dollar, we are seeing the Australian dollar continuing to gain on the Canadian dollar, and we believe this is largely due to a recovery in the Chinese economy. Even though it is a very slow recovery, we do think that the corner has been turned. So our view is that the Australian dollar will continue to gain on the Canadian dollar, and this is a long-term trend, we believe. Now, moving over to the interest rate futures markets, gains across the board. Some of this linked to crude oil futures under some pressure. Also stock indices a little bit earlier under some pressure. That's supportive. But I think the main reason why we are seeing some recovery today is that the probability of a rate increase later this year is now below 50%. In fact, according to the financial futures market, it is only at 48%. So that's supportive to futures. Longer term, though, we think inflation will be a more than offsetting negative, and we are up near major resistance areas in the bonds. So I think this is probably as high as we're going to get on these recovery gains in the bonds. And from here, I would look for a new leg down for the 30-year Treasury bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.